Good morning, everybody. My name's Nikki, and I'm your host for the next 60 minutes. And welcome to FSB's Funding the Future webinar. This morning, we're going to be joined by Celia Gaze, who is the founder and CEO of the Wellbeing Farm, one of the UK's most innovative and sustainable event venues. And Liam Francis, who is Senior Funding and Account Manager at Capitalise. In today's session, we are going to cover real-world insights from a business owner who has successfully secured funding, how the FSB funding platform can help you find and apply for funding opportunities, and practical steps that you can take immediately to improve your funding readiness. Please use the Q&A button to send over any questions that you would like to ask throughout the session. We'll aim to answer as many as we can during the session, but we've already had a lot submitted already in advance. We probably won't get through all of them, but we'll do our best to get through as many as we can. This session is being recorded and it will be available shortly on our on-demand page in case you'd like to watch it again. Everyone who registered will receive an email next week and the recording link and resources mentioned during the session. So without any more ado, I'm really delighted to introduce our first speaker, Celia Gaze. Celia is the founder and CEO of the Wellbeing Farm, an award-winning B Corp certified wedding and events venue in Lancashire, recognised for its innovative approach to sustainability, well-being and purpose-led business. A former NHS leader, Celia transformed a family farm into a thriving hospitality business that demonstrates how commercial success and positive impact can go hand in hand. Over the years, the Wellbeing Farm has secured and utilised funding opportunities to support business growth, sustainability initiatives and innovation. So over to Celia.
Good morning, Nikki. Thank you so much. I'm just going to get my slides up and then we'll move over to my talk. But thank you for that introduction, and delighted to be here. Can you all see my slides? Yeah. Yeah, we are. Oh, we're good. Right. Fantastic. So So obviously, thank you for the introduction. You've had mine, and just so you know, I'm going to be talking about, this was the farm in 2011, and this is the farm now. So quite a journey to go from what you saw originally in 2011 to now, and I'll be sharing some of my story, as Nikki said in the introduction. I think kind of one of my first experiences is it's intended to be very practical. I'd come from an NHS background where everything was very almost a few inches deep. And I kept getting rejected by banks going, why on earth? I've got a farm. I've got for what I thought was a really clear vision. I had a good plan. And why on earth? Because I was rejected by quite a few banks initially. And the biggest reason for the rejection was that I made the plan too complicated. And a company called Access to Finance came along and literally simplified my plan into 3 pages. And it got accepted straight away. So I think the first lesson is don't make it too complicated as to when you're doing your finance proposals, because to be quite honest, try and keep it as succinct as you can, because they don't need a 50-page document. They needed a clear, succinct summary of what you're about. And over the years, what occurred to me around this whole sort of issue about finance is very much around the wanting, they invest in you just as much as the vision that you have for your business and what you want your business to be invested in. So, and it boils down to 3 things. You as the business owner or the person that is wanting to secure the finance, your numbers, because, we're looking at money, so you've got to have numbers in there, and the actual plan itself, that what you're wanting to get the funding for. And so I'm just going to cover those in sort of briefly, those sort of areas. The first one, the confidence in you. I mean, I'm not doing it as I've got a big farm. You've got to remember that I started off with a very, very small kind of rundown farm with no funding, and I had to do this from the ground up. And sometimes up as much as you can. Now, a lot of awards you could enter are free to enter, and there isn't a barrier to entering those. Try and gather as many stories of the impact of what you've done. What are the outcomes? What are some of the kind of features? What are the benefits? What is the finance looking like as of what you've done, and what impact are you making to your business? They want to know sort of what qualifications you've got as the owner. They want to know about your achievements and what you've done. So anything from what sort of customers have you got? How many of people have you got on your mailing list? Kind of how credible are you in driving this business forward? Because they want that assurance that you can pay the money back if anyone lends to you. And obviously, for us, we became a B Corp. If you're not familiar with the B Corp, it is a sort of sustainability award. But to be quite honest, I will go there later. That actually a lot of people can use the B Corp framework for free. And it isn't just about sustainability, it's how to become a better business. And that is all free. And you can go online, look under B Corp, search in B Corp assessment, and look at that and follow some of those steps. But you've got to really do the groundwork of really having a track record of that experience, that passion. People invest in people, and you've got to really come across as really enthusiastic and passionate about your plan. So obviously some of the things that we did. Now, never mind the B Corp, but people can write books. It doesn't cost a lot of books to create an ebook. You can create that for very little money across your business. As I've said, TEDx talks don't cost anything to do. Okay, you've got they're hard, but you can do these. I created an international awareness day. That didn't cost a lot of money, but actually the credibility it gives you, all these things are good. Now, the second one is going to the numbers. The numbers, you're borrowing money, you've got to understand your numbers. And I came from a background where I was never, I hate finance. I'm not good at numbers. I'm not a numbers person. And I actually found this hard to do. At one point, I was nearly £8,000 in debt, kind of, very nearly bankruptcy, got to be honest. And cash flow for me was a real problem. And sometimes, you've got to but they're you really got to be very, very clear on what you know. So for me is really important because they can help you pull this money together. Doesn't have to be a full account. It could also be a bookkeeper, but you've got to have a really clear plan on your numbers and to be really using them as a partner to help you pull the numbers together to get the money, to get some sort of information ready for the banks, or for anywhere you're getting funding from. And this is a really important thing, and you can't do that. You can't borrow money without these figures. So this is very, very important that you actually get the figures right and get this right. And actually, if you do this finance right, the systems that you put, because they want to know, can you repay the debt? Are you putting the money aside for any VAT if you're at that stage? What are your cash flow forecasts like? What is your pricing? What's your profit? What's your actual figures? What have you got in place to manage the money? Because they want the reassurance that you can pay the money back. So I cannot underestimate the importance of this. And it's taken me a long time to get to this position that I am now, with knowing a lot of things, because I had a big struggle and I've been in business for 13 years. So very much before asking for funding now, you need to ask yourselves these really, to be able to almost solve these, or ask these 5 questions, because they will be asking you this. Be really clear on what problem you're solving. What is the money going to do for your business? What problem is it going to solve? Be really clear about that. Because sometimes it might even be that you don't need money. There are other ways of getting help for your business other than financial. But then if you're going down the route, is that money that you're after going to generate income for you so you can pay it back or do whatever you want to do with the funding that you're secured? Um, and is it something that, is it going to be quite visible? Your customer's going to make it, is it going to make a big difference to your customer base, or is it just something that will help with the general running? I had to get funding for a generator. Now, a big three-phase generator. Now, that generator isn't something exactly the customers would see, but on a farm prone to just electricity, if I have a power cut, they're going to know about it. So it's things like this that you've got to just be really clear of the benefits and what you need that for. Can you repay it? I've covered that. And does it fit with your long-term vision? Sometimes you want to be investing, I don't know, in an oil heater when actually everything's going green energy. So to be quite honest, you've got to be able to think longer term. You don't want to be investing in a big piece of equipment that's going to be, kind of not in 10 years time is going to be out of, kind of not up to date and what have you. So things like that are important. Um, and all of this should come together in what is called like a pitch deck. And this doesn't need to be complicated. This could be on a few PowerPoint slides, like a presentation, really being clear on who you are and what's your sort of values, what's making you unique and standing out. This is what we had to do in the events industry, the problems we were facing and why we needed the funding, the opportunity that if we invested and took this finance, where it would lead us, how much we'd be able to grow, what we could do with that funding, how the investment would sort of sort the problem and unlock the potential, and how we'd be able to pay it back, and kind of how it's going to be used. And you've really got to make sure that those parts are fully covered in a plan, because they're going to need to know that. It doesn't need to be complicated, and there are lots of organizations that can help you, right, kind of help you create that, but it does need to be done. And then I've just put together some sources of help that helped us. Now, hopefully, and I'm keen to learn this too, that there is a FSB
Oh dear, we're having some technical issues with Celia's presentation. We'll give it a second. Hopefully she'll come back to us. Celia, are you there? Mm, I think what we will have to do is pause on Celia's presentation and come back to Celia. Celia, are you there? Oh no, you think you've frozen. Oh dear, how annoying. Okay, what we'll do is we will come back to Celia. What we'll do is we'll go to Liam in the meantime, and then we will come back to Celia. So don't worry, you're not going to miss that presentation. Liam, can we come to you, please?
Yep, ready and prepared. So just give me 2 seconds to share my slides. Hello, everybody.
Wonderful,
Right.
thank you. So whilst you're doing that, I'll give you a bit of an introduction on Liam. So Liam is the funding manager for Capitalize, and senior funding account manager at Capitalize, bringing over 10 years of experience in business finance. During his career, Liam has supported businesses in accessing the finance they need. Capitalize is an FCA regulated financial platform and the partner behind FSB Funding Platform, helping UK small businesses to understand and control their business finance. So in the space of that time, Liam has brilliantly got his slides up and running. So, Liam, I'll hand over to you, and you can take over and then you can complete your presentation, and once Celia comes back, we'll finish the rest of Celia's presentation. Okay.
Perfect. Thanks so much for the introduction, and thank you for having me on today. And it's a shame because Celia was sharing some really, really good actionable insights there. There's some stuff that definitely I would have suggested as advice during this presentation as well. So I'm sure we'll get it back in a moment. But yeah, so as Nikki was saying, I'm the senior funding account manager at Capitalize. Been in business finance quite a long time. I've supported businesses that are just starting out, maybe a year of trading, and I've supported businesses that have been trading for 40 years and are on millions of pounds of turnover. So I've seen it at all stages of the growth cycle and all different types of finance that are required, different steps along the journey. So who are Capitalize? We were funded in 2016 by Paul Surtees and Ollie Maitland. We have over 130 lenders on our panel, covering a wide range of lending types. We are 30 employees across 2 offices in the UK and South Africa. We also have some employees that are a bit remote across Europe, but yeah, the 2 main offices. We have, in the 10 years, generated over £2 billion worth of funding offers from our platform, and we are FCA regulated. And you can see at the bottom there, we are partnered with Experian, 2020 Finance, Enterprise Nation, and of course, the lovely FSB. So, today's talking points. I'm going to go through why funding is a strategic tool, matching the specific type of finance to your individual goals, 5 different types of funding explained, real deal stories from our clients. So I have some case studies, getting funded through the FSB's funding platform. And then obviously we have the Q&A at the end anyway, which sort of covers both presentations. Um, so look, the first point is that in the time that I've been doing this, a lot of businesses that I speak to only think about funding when they need it urgently. They'll call me a week before they need the funds to land, sometimes a couple of days before the funds, need to land for quite urgent matters. The ones that grow fastest treat funding as a tool and generally have it, you know, um, as part of their longer term plan and an understanding of when different types of finance might be needed at certain points during their sort of next 6 to 12 to even 18 months worth of growth, accepting that we can't always know when difficult cash flow periods might land and events that we don't anticipate. But there are ultimately 2 different ways to use finance. I won't read out every bullet point, but on the left we have reactive types of funding, which is kind of what I've been talking about there. Where crises can trigger the application, which gives us less time and other brokers and funders less time to compare lenders, which ultimately gives you a weaker negotiating position. You run the risk of taking on an expensive or wrong product, and it can be stressful. You are making decisions under pressure. If you're treating funding as a strategic tool, you are planning ahead, normally 6 to 12 months before you need it. You've got time to search the market. You've got time to get matched to the right product. You can protect your cash flow while fueling growth, and you can make more calm, informed decisions if you have it as part of a plan. But ultimately, what are you trying to achieve? We have short-term products that are available, so working capital for injections to cover costs, stock or simply a gap. We have business credit cards available for, day-to-day spend and purchases. And then invoice finance as well. If you're working on a more B2B basis, can get paid faster on your invoices, particularly if you're on 60 and 90-day terms, and that removes a bit of guesswork on the cash flow. You make your cash flow a bit more predictable. And then we have, longer term options such as revolving credit facilities where you can, draw down, repay, draw again, and ultimately you've got a committed line there as long as your business performance holds up. There's asset finance where you can keep cash for high margin work and let the asset pay for itself. I believe Celia was talking about return on investment there, and she was talking about her generator. That's a prime example of where asset finance can be used to purchase the large piece of equipment that you need. And then, if you've got your business plan right, that specific asset will pay for itself over time, either in cost saved or funds generated. No pun intended. And then there's revenue-based and merchant cash advances, where if you're in more of a card payment or retail territory, you can flex your payments with your sales, which is really built for e-commerce and inventory. So I'm going to go through these one by one. So a revolving credit facility, that's a credit limit that moves with your business. So that's a pre-approved credit limit which you can draw from and repay. Interest is only charged on the funds that you actually use, and typically, there are some that will give you sort of 1 to 2 years and then ask for a review. But we do work with some lenders who ostensibly offer a committed credit facility. And the only time it would ever close down is if the lender left the market or if your business performance suffered to the point where they'd have to sort of have a review with you. But these are best used for managing cash flow gaps between invoices, funding stock or inventory cycles, supplier and HMRC repayments, and supporting growth without locking up your capital. And look, we've got Liam's take here, which is exciting. So why pay interest on money that you're not using? So yeah, and I think this is a key conversation I have with a lot of customers. A lot of businesses will come asking for a loan, and in some cases, 100, 200,000 pound loan is, or lower is exactly what's needed. They need that one big one-off cost, and they're happy to take all the money at once and pay it off over, an amortizing term. If you have ongoing needs and you know that you're going to keep needing to reapproach the market every few months because you've got, different purchases that might come up, it sometimes makes more sense to have a limit put in place, and then you know that you can predictably come back and draw that money every time rather than having to reapproach the market and get approved by a new lender on each application. So it can work very well. Asset finance. So what is this? So it's finance that is secured against an actual physical asset for the business, which is normally equipment, vehicles, or machinery. That is often the security itself. So you don't normally need to tie up any cash or property. Some lenders might ask for a personal guarantee, just in case the asset depreciates or breaks or there's an issue with it. But oftentimes, if a lender is providing you finance against an asset, that is going to be what they're looking to recover in the event that you can't repay. So you are de-risking your own business cash and your personal exposure by securing finance against the equipment or vehicle itself. Um, you can structure this as hire purchase, a financial lease, or an operating lease, and spread the cost over the working life of the assets. This finance is best used for buying equipment without depleting your working capital, winning contracts, and keeping a higher margin cash free for other projects, and scaling capacity without a large upfront outlay. A lot of them will also offer asset refinance. So if you've got an asset in the business already, that is paid for, rather than taking on, new debt that you're guaranteeing, you can offer that asset that you've already got within the business as security for a lender, and a lender will lend against that value of the asset, and sort of take charge over that. So that's another option as well to you. Credit cards, often, as I'm sure many on the call will be aware, are often used sort of in early, they're kind of used at two different stages of growth. They're either used very early on when businesses may not be able to get access to other types of lending, but I also see them used by very large businesses for day-to-day purchases when they've got, high limits with, Amex and lenders like that. But essentially, a business credit card, works quite similarly to a personal credit card in some respects. It's just a revolving line of credit tied to a physical or virtual card. You spend up to your limit and you repay in full or over time. Can include cashback or rewards, and can sometimes with some lenders be flipped into a buy now, pay later type product. But we certainly work with one or two lenders that offer that. But that's best used for day-to-day purchases, managing cash flow, and teams need spending access without personal liability. So and it's very good again in early stages where maybe larger lending houses aren't willing to accept your application. You can build quite strong business credit history by taking out credit cards, using the funds, and then paying them off. Invoice finance. Invoice finance is an interesting one because a lot of businesses still see invoice finance, this very old school type of product that's sort of tied up in red tape and with the big banks, and that still exists, but there has sprung up within the market like almost like challenger invoice finance providers who sort of pride themselves on speed and tech and efficiency, and so there is sort of another market opening up in the invoice finance space certainly, but essentially if you're a B2B business that is getting paid on 30, 60, 90-day terms, that, as you know, can make cash flow quite challenging because you'll have gaps in your cash flow your cash flow forecasts and your cash flow planning. And during that time, you'll also have outgoing costs as well. So with invoice finance, you can typically get 70 to 90% of the invoice value paid up front, normally released within 24 to 48 hours of the invoice being raised. And then the balance is just paid back to the lender once your customer settles. And that is available as factoring, where the lender manages collections, which can be quite good if you're a fairly small operation, where you can sort of hand over the collection and the credit control to the lender, or confidential, where you are still chasing your debtor for that debt. Some people just intrinsically prefer to keep that in-house. But yeah, best used for B2B, bridging gap between delivering work and getting paid, funding payroll or supply costs without waiting for customers, and really removing the guesswork from cash flow forecast. a lot of the best businesses that I see use invoice finance in some regard, whether it's on a low level or for their entire book. It very much that does make that cash flow a lot more predictable. And then revenue-based finance. So this is much more for sort of retail, e-commerce, or people that are taking card payments from their customers. So essentially, with an MCA, rather than it being like a standard term loan, you're taking an advance against future revenue, which is repaid as a percentage of daily or weekly takings. So a lender's going to look at the amount of money that you are taking in generally on a monthly basis. They will then, predict how much that's going to, go into the next 12 months. They will lend you an amount of money based on that. And then they'll, hook up to your, card payment machine or your platform that takes payments in the background. And then they will take a percentage of your earnings over that future. But so if you're earning less money in a month, your payments will go down proportionately. If you're earning more money in a month, the payments go up proportionately. A normal term loan will have fixed monthly repayments, so it's very predictable. But some people, particularly in retail, prefer to be paying less when they're earning less and paying more when they're earning more because it helps them, manage through seasonality and different points in their cash flow cycle. But yes, no fixed monthly repayments. Busy months pay back more, quiet months less. Faster to approve than traditional loans, and is based on the card terminal or online sales data, not the credit score alone. Okay, and that's used for, as we can see over the right here. So five, whoops, gone ahead too far. 5 products, different problems, all strategic. So gone through all those in quite a lot of detail. So I'll just leave the slide on there now for you to absorb sort of the basics there and sort of different points that you're going to need different products as you're growing. So a few real deal stories. I'll rattle through these so we can get back to Celia shortly. So there's £100,000, which I worked on this for an accounting firm, a professional services firm. They'd identified an opportunity to purchase a book of fees from another firm and expand their client base. They needed £100,000. Was able to secure this via our platform within 7 days, 48-month term for manageable repayments, really competitive rate of interest, and the acquisition was completed. Client base expanded immediately. Now, as Celia was talking about in her section, clear return on investment. That's it. When you're planning something, you want a clear return on investment. So this person's client book that they're taking on, it's a 48-month term loan, £100,000, a big chunk of change, but they know that client book they're taking on is going to pay for the monthly repayments and more, and they'll make a margin on it over that 4-year term. So yeah, always try to have your return on investment before taking out finance and understanding how what you're doing is going to pay for what you're taking out. A slightly larger facility. This is the revolving credit that I was talking about earlier. We work with a lender that helps businesses push their repayments out over 3, 6, 9, or 12 months. This was a large construction business, growing well, had an invoice finance facility, but still occasionally ran into some issues with supplier payments and HMRC obligations when they were starting jobs. So I secured a £390,000 revolving facility. They funded payments through it immediately, spread those costs over 12 months, which immediately relieved the cash flow pressure. And it sat alongside their existing invoice finance without a conflict. So they were solving the cash flow cycle from both ends, their incoming invoices and their outgoing creditor payments as well. So why use the FSB funding platform to find and secure funding? You've got business credit data powered by Experian. Capitalize a partner with Experian. All of our business credit data comes from Experian. So we have access to sort of the best level of credit data and up-to-date credit data. Every application gets a dedicated funding specialist. As a senior funding account manager, I generally work with our businesses that we've funded in the past and help them plan long term for their next steps of growth and the next funding they're taking on. But we have incredibly experienced, knowledgeable funding specialists across the team who will immediately pick the application up, normally call you very soon after it's submitted, go through a good sort of 15, 20-minute discovery call about exactly what you're looking to achieve, and then go out to the best fit in the market that we can find. Ordinarily, if we can't get you lending, it's because there is some sort of significant issue in the background in terms of credit data or financials. But generally speaking, we have a very good hit rate with applications that we're able to actually send to market. FCA regulated. So Capitalise, as the FSB's funding partner, has been regulated since 2016. So we are subject to all FCA regulations. So you are in safe hands. And as mentioned earlier in the call, we've had 2 billion in approved funding in the 10 years that we've been doing this. And we fund small businesses of every shape and size every day. Um, yeah, so you tell us what you need. As I referred to earlier, I kind of went through the process. You get the conversation with the funding specialist. We don't send you to 130 lenders at once. We will normally find sort of the 4 or 5 that best meet your needs at that point. And then if we can't get a decision out of those, we'll call you back and explain why that's the case. And then maybe there might be a few other lenders that could work that we would go wider to, but we'd always have that conversation before going again. And yes, your funding specialist will share all offers received in your business, break down the cost and explain the terms. There's no obligation to take the loan, and yeah, we're only ever paid on success by the lender, so you don't pay us for just going out and doing the search. So there is an exclusive benefit for you as an SFB members. So we've been partnered with the FSB since 2024 to make business finance simpler. With a capitalized subscription, you can monitor and improve your business credit score and check credit profiles of other businesses. And you can access the 130 lenders that I referred to a couple of times on the call. And we do have an exclusive discount here. So code on the left, 10% off for the lifetime of your subscription, and code on the right, or for 75% off your first build month if you're looking to become a subscriber. And I would say one of the big benefits of being a subscriber is you can not only check your own credit data, you can check on credit data of competitors or suppliers or customers. So you have like a good overview of your supply chain. And if someone's not paying you on time, you can normally have a look to see whether there are any overarching issues within that business that you might need to have a conversation with them about. So I'll leave those codes on the screen for another sort of 10, 20 seconds to make sure you've got them. And then here, what are your next steps? So what funding do you already have in place, and is it still the right fit? What are your plans over the next 12 to 24 months, and what capital will you need? Have you checked your business credit score recently? Because it does affect what you can access. And you can start your funding search through the FSB funding platform powered by Capitalise. There's one application, over 130 lenders, and there's a QR code here that will take you, straight to the relevant screen. So again, I will leave that on the screen for about 10 seconds so as people can photograph it if they need to. Okay, and there we are. Thank you very much for your time, everybody.
Brilliant. Thank you so much, Liam. That was a really, really helpful presentation. I'm delighted to say that Celia is back with us. So the wonders of technology, I know sometimes it doesn't quite go to plan, but it's okay. We've got Celia back. So Celia, could you resume your presentation where you
I mean, as far as unless I was talking to myself, I thought I was on the last slide anyway. So, or did I just cut off completely?
You cut off completely.
What, did you not get any of it?
You were there.
Yeah.
Yes,
Oh,
you were
perfect.
there, but you cut off.
Oh,
Yeah.
well, I was talking.
Right at the beginning.
Yeah. So all I was just saying is that following it, it was more a practical way of looking at the finance from a business, from a business owner's angle rather than a kind of financial lender angle. But I found the following areas of help. So grants. I mean, they're not as many as they used to be. Got to be really honest, but it's really good to keep an eye on what is coming through. There's always a few sort of green grants. There's different things on there. There is a government grant site, but it really is a case of keep looking on the internet, keep looking on different social media. There's all sorts of ways of, you've obviously got the FSB as well, and just keep looking at what's around. I was saying that every area should have a business support unit. Ours is called Boost Lancashire, Boost Business Lancashire, because I'm in Lancashire. But everyone has something. There's Greater Manchester has one. I know Liverpool, all big cities, and it all covers all the regions, and they are very helpful. You pick the phone up, you say, I need help, business advice, business support, and they will send somebody. They'll even give you a free, so many hours of help. So if you're struggling with how do you put a plan together, how do you put that case study together, how do you do your figures, they'll be able to help you with some of this. When I was there, they used to organise events called Access to Finance. Now, again, everything everything keeps changing and it might have another name. But the point being is they have events where there are a load of lenders in the room and you go round and talk to each one. And it's a great way of networking with lenders in one go, looking at the finances and just getting advice as to possibilities of would they be able to lend to you. Then we've also got something called Funding Circle that I've used in the past that's been helpful. The NatWest runs an accelerator program, and I think Lloyd's does something similarly. But the benefits of being on the NatWest accelerator program is it's relatively easy to get on, and you don't have to be a particular size of business or anything. But you're in with a bank and you get to know the bank really, really well. And again, that's another way of, you've got to just explore various different ways. I've always found one of the best ways is to build your network and you go to these events and you see people from Barclays and all types of different banks and just go and chat to them. You're not going there with an interview for your business, but you just get to know because sometimes it's who you know and how they can help you. And again, finally, we have something called Rosebud Finance, which I don't know if it's a Lancashire thing, probably is with that name. But again, they've been incredible. And even if they can't help you with finance, you talk to somebody and they will just point you in the right direction. Also, just ask somebody where you can get the funding from. So that was just my experience of the things that I've used. But I'm definitely going to be looking at that FSB funding platform as well now. There you go.
Fantastic, Celia. Thank you so much. And that is a really helpful final slide, actually, because sums up lots of things that people have been asking questions on, actually. So that leads us quite nicely into the questions and answers. So I'm going to try and sort of round up because lots of them are sort of on similar themes. So
Mhm.
the first question that has been asked a lot actually is about grants. Now, Celia, you've touched on grants a little bit, and obviously there aren't as many grants and things
Mm.
around as there used to be. But first of all, I'm going to go to Celia and ask, as a business owner, what would your advice be about where you find those local grants or national grants, and what kind of things to expect?
So obviously, like you've said, they're not the grants that used to be, and they're few and far between and difficult to find, and the competition is a lot tougher than it ever was in the past. I mean, I always start with, I'm going to be honest, quite basic Google search, so trying to find out kind of grants for my area. There's usually quite specialist, some charity kind of, there's funding platforms for charities, and you don't have to be a charity, but what I'm saying is they're quite good at finding grants. There's stuff for all sorts of different things. And for me, I've done a lot on like the farm diversification grants. That's been a good one for me. Sometimes as well, there's specific companies like there used to be like big companies like Nestle that gave grants, people like big companies. It isn't an easy thing. It's a lot of hours on searching the internet, on searching sites, on doing this. But again, it might be that government plan that I've put on before might condense them all into one area. Certainly that boost, the Lancashire business support, or sorry, not Lancashire, any business support in your area. I don't know if the FSB has a grants platform, but again, that might be something. But it is just a case of, watching. Sometimes there are announcements on social media, seeing what others have got. It's all about your connections and who knows and what forums you're in and things like that. Unfortunately, it's a bit of a hit and miss. The other good thing though is sometimes, I mean, for me, I've sometimes found fantastic help from the colleges and the universities. They are crying out to help businesses. They come armed with enthusiastic young graduates. I've had master's graduates working on my projects for free for 6 months. I've had 18-year-old students who have just been brilliant on AI and social media and have created amazing things that would have cost me a lot of money, and they've done it all for completely free. And I would certainly recommend connecting to your local college, your local university. They're crying out to help entrepreneurs because these students need experience. And I'll tell you what, sometimes it might be that is a really good source of help for you as well.
Yeah, good point. Thank you, Celia. Liam, anything that you'd like to add about grants?
In all honesty, I think I've been at Capitalize for about 18 months, and I know that some years ago, we were doing a little bit in the grant space, but I think it's as Celia said, it's an area that's really become a lot more challenging and dried up quite a lot. And I can't think of grant funding that I've seen since I've worked here. It's just not an
Yeah,
area that we see a great deal of.
Mm.
And so I would say Celia, being at the sort of the coalface
yeah.
of this stuff, is sort of very well informed in what she said. And then there are obviously going to be other areas outside of, funding platforms that you can look at these grants. Yeah.
I
Uh,
think there are
Sorry. Yeah.
sometimes, sorry, Celia, but I was going to say, I think there are sometimes some downsides to grants as well, so you might want to just mention.
Well, yeah, they come in with very kind of strict criteria. You've got to do a
Yeah,
report after them.
Mm.
You've got to kind of have certain criteria. You've got to sometimes shoe tail what you want.
yeah,
Sometimes these application forms can be massive for a lot of work with no output.
yes.
I should have mentioned before, there's an organisation called Innovate UK, which has got quite a lot of government things coming down the line. Research and development seems to be a lot of areas for grants. But what I really would say is connect with your business, government led business support unit, usually connected to your council. Just go Google your council and put in business support, search your council, business support, but it usually is like a bigger regional, like Lancashire, Manchester, Liverpool. I'm sorry, I don't know all the other regions, but they go to them first as an inroad, and they will be able to point you in the right direction for grants and connect you to the Innovate UK representative for your area. And again, it is about networking. It's about going to these local forums. It's about connecting as much as you can because people are there, but you've got to do the legwork. These people are not, it's not a case anymore of clicking on something, filling in a quick form and getting the funding. Those days have just gone.
Yeah, no, thank you for that. And absolutely, the business support sort of organizations locally, they're all called different
Mm.
things. So they can be tricky to find
Exactly.
across all the different regions.
Mm.
There is something called Help to Grow, which is a
Yeah,
national
yeah.
website, and that in theory should take you through to your local, in my area, they're called growth hubs. They are quite often called growth hubs, but they
Yeah.
sometimes vary a little bit. So, but Celia's absolutely right, growth hubs and the local business support organization that's usually linked to your biggest sort of council, whether you've got a
Mm.
unitary council or district councils or combined authorities, usually are the places to start with understanding what's going on locally in terms of anything that might be specific to your local area, grants wise. So thank you for that, both of you. There's also been lots of questions about funding for startups. So obviously, when you're starting up, you might not have much revenue coming in. You might be pre-revenue. You might not have actually started trading yet. So I'd like to come first of all to Liam to find out about what
Mm.
options are available
Yeah.
through financial organisations.
Absolutely. So again, startup and seed funding is another one of those sort of very challenging areas because it's sort of like chicken and egg. A lot of lenders in the market, particularly on term loans, they're looking for some kind of predictability of income in the future to be able to meet the monthly repayments. But in doing that, they're also looking at past revenue. And if you haven't generated revenue, they haven't got a track record to judge you on. So you do end up in the situations where it's very challenging. I know a lot of banks offer, we'll look at startup loans, so maybe not the market but in terms of our market, um, some lenders will lend to you if you're relatively early in revenue. So if you're D2C, some of those, merchant cash advance providers that I talked about will, look at your sort of 3 to 6 months of initial revenue and sort of make a determination based on that. So you can apply for one of those if you're early revenue stages, if not necessarily pre-revenue. Uh, the other option is secured lending, and not everybody wants to hear that. But if you have a personal property or a business property that has some value in it, we do work with some lenders who will take either a first or second charge against that property and
Mhm.
use that as the initial security of the loan, and then you obviously pay that back over the period of time that's available to you, and then release that charge from the property, and then hopefully by the time that's happened you're standing on your own 2 feet enough, the charge comes off the property, and then you're in a position to get more unsecured lending, where it's a personal guarantee as opposed to security against the property itself.
Yeah, thank you, Lim. That's really helpful. And Celia, from your experience, starting up a business, where did you go for your finance?
So, well, again, I say that's where this growth hub, or whatever they're called nowadays, were invaluable. They gave me a mentor free of charge for so many weeks, who could help me weave my way through all of this. I was lucky enough to get a farm diversification grant, but that didn't cover all of it. I had to lend on the back of a property, and that's where you've got to be really careful how you set your business up, because if you're a limited company, if anything goes wrong, then they can't take your house off you type thing. So, I think you've got to be seeking this advice before you do that. And the best place is, I've looked at my growth hub the other day, and there was still very, very clearly marketing support for new business. They have special packages of support. They do want to encourage business. So I really would go to that as a first point of call.
That's helpful. Thanks, Celia. And coming back to you, Liam, one of the things that, does come up quite a lot is the British Business Bank and the government-backed loans and support.
Mm-hmm.
And they offer funding
Mm.
across all stages of the business, but
Mm,
particularly popular around the startup. But are
sure.
there any drawbacks to that? Are there any things to watch out for? What would be your advice around the government-backed schemes?
So the GGS, it's not. I'm not coming on here to, sort of diminish, but maybe demystify. Is probably the correct word.
Yeah.
So the GGS is obviously an excellent scheme that the British Business Bank has in place. It's kind of like the last iteration, I would say, of the COVID loans.
Yes.
From the bounce back loan to C-bills through to RLS, and now the GGS. What I would say though is um, I would say a lot of businesses sort of use it as a good hook to get people to get businesses in and sort of talking to them about potential lending. Um, I mean, it's 70% of the loan figure is guaranteed by the government, but that is guaranteed to the lender. And what it normally means, in my experience, and certainly with the panel of lenders that we deal with, is that it allows lenders to lend to businesses that might ordinarily be outside of their appetite. So maybe it's a business that's had like quite a bad trading year, maybe profits are down, maybe the balance sheet is a bit diminished, maybe income is right. Ordinarily, that business might not qualify, or might qualify for like a slightly higher price banding with a particular lender. But having access to the GGS allows that lender to go, well, we can use the GGS to actually make an offer to this business. But ordinarily, it still means that you get a personal guarantee. It doesn't necessarily get you preferential pricing, because you'll end up on a whatever rate card the lender offers. You can still get a cheaper deal outside of the GGS by applying to these lenders anyway. Um, and yeah, again, it doesn't guarantee that you won't give a personal guarantee. A lot of GGS lenders may still ask for a personal guarantee alongside whatever guarantee they've got to the government on that 70%. So it's a useful tool. And for a business that's maybe not had the best year, or is early, maybe they've only filed one set of accounts, it maybe does give them access to some lending they might not have otherwise have had. And it's definitely worth sort of going after and looking at. And I think the British Business Bank has a startup loan as well that you can look at through there. But certainly on our panel, we have a few lenders that offer it, but we can't apply for it specifically. We go to that lender and we say these are the financials, these are the bank statements, this is what the lending purpose is. And then if that lender then qualifies you for the GGS, you'll get a GGS offer. But we won't necessarily go in and make the application for the GGS. It will just be the application goes in, and they make that determination based on their credit assessment.
That's really helpful. I don't think many people really understand what the growth, the government back schemes are actually,
Yeah, I
you
think
know.
people hear it and they think of
Mm.
no PG lending, 5% annual interest, and when we're sort of talking 2020, 2021, and I think I have 5 conversations a week with customers
Mm,
where I sort of have to explain that it is a good thing, but it's also maybe not in line with their expectations of what it could do. Yeah.
yeah. Okay. Thank you for that. That's really useful to know. And the other question that we're getting a lot as well is, Obviously, we've mentioned about if you are a limited company, is limiting the liability on you personally. But what about if you're self-employed? What are the sort of financial options that are available to you if you're self-employed? And Liam, I think that's probably another one for you.
So are we talking, I think, are we talking working as a sole trader? I guess is what we're talking about
Yes.
here. Yeah.
Yeah.
So if you're a sole, so there used to be quite a lot of options available for sole trading businesses. We had quite a few lenders on panel that would do that. I think we're maybe down to a couple. Like yeah, maybe um, a lot of lenders have kind of left that market in terms of sole trading.
Mm.
So I think it's probably credit cards still, and you can come to us as a sole trader. Maybe we can have a conversation with a couple of people that offer it, but the barrier to entry is quite high because you haven't got a balance sheet and a limited company. Well, you've got a balance sheet, but you haven't got like a formally limited company to be able to sort of structure that debt against. So yeah, it is a very challenging area um, to try and place funding for, and obviously everyone's got their own sort of views on how they'd prefer to structure their business. But if you are sort of looking at funding, speak to your accountant, speak to your personal business advisor, whoever you speak to. But I think access to funding is sort of much more down the partnership, LLP, limited company line at the moment. There's a lot more of what's available.
Yeah, no, thank you for that.
Mm.
And I guess, your contact details are going to be
Mm,
shared at the end. So if people do have specific questions about their own specific cases, we'll be able to
yeah.
you'll be able to put these questions forward. So thank you for your input on those areas. We've also had lots of questions around accessing investment and particularly, angel funding and how does that actually work? So I might come first in that case to Celia because I think you might have had some experience of that or certainly know people who have accessed angel funding, and then we'll come to Liam for his response as well. So
Yeah, I'm going to be honest, Nikki. This is something that I haven't because I've been because I'm always a little bit of a kind of play it safe. I've gone past through the growth hubs and who they've suggested to with me to use. I know I've had funding on the back of investment in terms of they financed the asset. I said I wanted to buy this big generator, which was about £40,000, and they purchased the asset, and I paid them through that company. But again, I think Liam might be a better on this particular section.
yeah, so
Thank you
over
for the
to you,
opportunity.
Liam. Thank
I
you.
mean,
Over to you.
to be totally honest, and again, but because I've spent very little time in like the real sort of startup, like early phase stage, I've dealt with some businesses that have angel investors and have had people sort of come in and have angel investors like structured alongside some other debt, but not to disappoint the room, but again, it's an area that I have quite little exposure to just because of the stage of development that I'm normally at with businesses that I'm speaking to.
Yeah, so for those people that want to know a
Mm,
little bit more about
mm,
angel and investor networks, I guess, use your local
mm,
business organizations, business support
Yeah.
organizations,
mm,
such as your growth hubs or whatever they're called in your area, like Celia mentioned. And also, your local networks as well, getting to know other business owners in your
mm,
local
Yeah.
areas will help you talk to people who've actually got lived experience of
mm,
dealing with these things. And FSB do offer lots of networks in your area, so do check out our events calendar on that.
Yeah.
Okay, so moving on to another area that we're getting lots of questions about is funding for growth. Particularly things like investing in new technologies,
mhm.
things like artificial intelligence. Liam, do you want to come in and talk about what sort of options there are for funding growth?
I mean, we see it. I would say that the two biggest loan purposes that we see are cash flow and
Yeah,
growth. Okay,
yeah.
so the growth is a big part of what we look at, and lenders love a. I mean, Celia was talking about founders' personal stories and everything else and forecasts, but lenders really love to see a business that is investing in itself and using the money for tangible updates and upgrades made to the business that are going to improve revenue in the future. The lenders that are on our panel really like businesses that are investing in new technology, purchasing sort of more tech and more equipment to be able to grow. investing in people as well to help with that technological growth and sort of augment that, the AI and everything. We've seen a lot of loans over the last year that I've dealt with, where the request has been for a loan to invest specifically in AI software and development. It's something that we see all the time. And if you're a sort of strong growing business with that plan as well, and it's sort of good security in the background, a lot of lenders are going to want to have that conversation with you.
Yeah, thank you for that. Celia, anything to add on funding for growth?
I mean, again, I would be just looking at. Sorry to keep saying the same thing, but these growth hubs. That's what they're there for. The access to finance. When I was doing this and I didn't know where to turn or how to do it, they put me on a course on how to create a pitch deck. It was a funded thing over 4 weeks where literally was exposed to investors. We worked alongside finance specialists to create my business plan, and then they helped me pitch it to investors. There's quite a lot of organizations are doing that, especially female founders. There's things like Female Founders Network. There's all sorts of things that will help you pitch to investors. There's lots of kind of big events that you can attend, all free of charge, with particular investment angles to them. And I think it's sometimes a case of the more you search, the more you're going to find on these things. And there's not just one. I wish there was one portal you could go to that covered everything. But unfortunately, in between FSB, you've got chambers of commerce, you've got access to grow, you've got growth hubs. The problem we've got is nothing is in one area. It's literally all over the place. And you've got to be really resourceful as a business owner to hunt for these things. And sadly,
You
you
have,
know.
absolutely. I was going to say as well, another tip for everybody listening in. If you will have an FSB regional business and stakeholder manager like myself. I
Yeah.
look after Hampshire, Dorset, Isle of Wight, and Wiltshire. There are lots of me all over the country, and we can connect you if you're unsure where to go locally. We do have these contacts, so we can put you in touch
Yeah.
with these organisations and Help to Grow. I think they actually do have quite a lot of webinar content on
Yeah.
the Help to Grow website. Things like you say, Celia, about writing your pitch deck, all of those things. So there are lots of useful resources around, but it's finding them that is the tricky
Mhm.
bit.
Yeah.
So yeah, no, that's really helpful. So just going on, a couple of specific type questions actually that have
Mm.
come through, but I think might be useful for people to hear about. So first of all, anybody want to chip in about crowdfunding, what it actually is and how it works? Liam, you might have come across it, or it might.
I mean, Celia had a chuckle there. Maybe it's something that she's seen quite a bit of there.
No, I haven't. Again, if I was wanting this, I would literally be gone on a crowdfunding website. These
Mm,
crowdfunding websites run webinars like anywhere
mm,
else. And sometimes this is the problem. There isn't just one portal that covers absolutely everywhere. It is
mm,
very hard. Part of the test of being an entrepreneur, business owner, and to grow your business is your resilience, your resourcefulness, the putting yourself out there. You network like crazy, and it is the who you know who helps you. And I wish there was this centralized one resource, but there isn't. And if I was looking for all these opportunities, I'd be looking at everything across the board. I'd be on a crowdfunding webinar to know how to resource it. And I'm sorry if I can't be more helpful, but that is the way it is at the moment for businesses.
Yeah, no, thank you. And another quite specific question, but
mhm.
again, probably Liam can help you out with one.
I think I
Although
know which one
Celia,
it's going to be. Yeah.
no doubt had some experience of this, is that fees and all
Hmm.
of the sort of admin
Yeah.
type things that are connected to finance that you maybe don't think of initially.
Yeah.
So Liam, what could you tell, or what would you be your tips around the fees and things that come along with finance?
I mean, I don't want to be intransient. Lenders charge fees. A bit like, if you're taking out a car purchase, hire purchase arrangement personally, if you're getting a mortgage, like you'll pay fees on those, and it's the same in the business world. A lot of these lenders have their own cost of funds, and not I'm not trying to make a case for the big boys, but I'm just saying that a lot of these lenders have their own cost of funds. They you'd be surprised at how little a margin they sometimes make on the actual interest they're charging on the loans. That's normally just sort of covering, the various sort of internal costs. And so a lot of the margin that they actually make is on the upfront fees that they're charging. So yeah, so that is how I can put it in the plainest terms possible. When we go out to get a loan, because I can see the question, saying that they catch people out by the time it's unraveled the full offer and everything else.
Mhm.
When you're dealing with Capitalize, when you do that initial discovery call and we've worked out roughly where we're going to place you, we will always explain what we think the upfront fee is going to be for the particular lender. You won't be caught out. We will give you the range. We will tell you roughly what it will cost. We'll normally do a calculation based on the interest rate we think you're likely to get as well, and sort of give you the monthly repayments to make sure you can afford it. Ask what the return on investment is. So the idea is that with Capitalize, that we go into every funding application with open eyes. Our open eyes, your open eyes, so nothing is going to sting you down the line. Okay, and that goes at the same because we are a funding platform, and we do earn a commission from the lender. But again, that will always be explained to you up front. Like that won't be something that's sort of hidden. Like it's always confirmed at the point of offer, at the point of payout. So yeah, it is. I don't want to be intransigent about it. Lenders charge fees, but we are in how we deal with things very upfront and how that all works.
Thank you so much. And we are exactly on the hour now, so I'm going to wrap up here. But first of all, a huge thank you to Celia and Liam for sharing your knowledge and the tips, which are so vital, aren't they, and experiences, so that we can all learn from it. I guess to sum up, if you're looking for support to look at the whole market and the types of funding options that you have available, do, contact use their specialist advice and help. Do connect with your local growth hubs and business support organisations. Like I say, if you're struggling to find who they are, speak to your local FSB regional business and stakeholder manager, or have a look at the Help to Grow website as well, and that should help you find your local support organisation. Yeah, because there are lots of things around, but you do need to have those connections, and you do need those networks sometimes to find them. We hope you found this session useful. Everyone who registered will receive an email next week with all the links and resources mentioned, plus the video to watch again on demand. If you enjoyed the session, please do leave us a Trustpilot review. If you're not yet a member and would like more information about our member benefits, please visit our website to explore the benefits. Thank you so much, and goodbye to everyone.